Good afternoon. This is Mike Peterson, the Bear Market Investor, with a market update for February 9, 2011. We're here to look at the S&P 500 stock index in a 30-minute time frame. We're also going to be looking at the Volatility Index as well. First, let's go ahead and jump right into wave structure. We had top of wave 3 of 5 of C completing at this level right here, followed by a 335 correction in the form of a running flat, which completed wave 4 at this level. Then we had a 5-wave push, I believe yesterday, February 8, 2011, completing the entire bear market rally from March 2009. That would be wave 5 of C. We need further confirmation of this. Today, at least a short-term reversal was in fact confirmed. What we had was an initial sell-off, but that did not break this critical area here that needed to be broken, which was this last fourth wave low. We did get that in the afternoon, and as we will see in a shorter time frame, I am able to count a 5 waves down. Now, what we need to see ideally is this fourth wave broken right here, as well as this one. If this one in particular is not broken, it is possible that we could subdivide out, meaning that we could have wave 1 of 5 of C completing at this level. At this point, there's no reason to assume that's the case. However, we cannot yet rule it out. We need to see support taken out. We need to see fourth waves taken out. Once those are taken out, it is likely that the larger bear market has resumed. Regarding this broadening top formation, we have a first touch, a second touch, third touch, a fourth touch, and finally a fifth touch. Now, once this pattern breaks down, we should see this prior fourth wave low here taken out. That will help signal that the larger bear market is in fact resumed. However, I do want to tell you this. If the bullish Elliotticians are in fact correct and we are in a bull market, that would have us topping at wave 5 of 1 of 3 at this current level. We would then have a pullback in a second of third wave. Then we would have a third of third wave to the upside. That would most likely bring us well beyond the 2007 peak in the stock market. Personally, I do not buy that count. I do not think it's valid. I do think there's a lot more credibility to the bearish count. It doesn't mean that they couldn't be right. I just do not believe that they are, based on the analysis that I have done and that which I have seen from master Elliotticians. Now let's go ahead and examine the 2-minute chart and see exactly what's transpired over the last couple days to give us an idea of what we might expect within the next couple days here in the stock market. Now we're looking at the 2-minute chart of the S&P 500 stock index, and what you can see yesterday, February 8, was that the wave structure was very, very choppy. This made it very difficult to read whether or not we had in fact concluded a 5-wave push to the upside, beginning with this fourth wave low right here. Now what this probably was an ending diagonal. It just doesn't count good any other way, and I don't know what else to say there except that's probably what it was. In any case, even if it wasn't, it is possible that the wave structure actually did complete overnight. Regardless, we got a sell-off, eventually breaking below this last fourth wave low, suggesting that in fact we probably have topped. Now, let's go ahead and count our waves here. From the top, it looks like we had a wave 1, an ABC rally retracing almost all of the decline. A wave 3 ending here. A wave 4, and then a wave 5. Followed by an ABC correction. And then we had a 1 of 3 down, concluding at this level. And using this cyan Fibonacci retracement level right here, we can see that we retraced approximately 90% to the nose of the decline that we had. Now, if we had some sort of other structure I don't believe that's the case, but if we did, suggesting that in fact this was the first 5 waves down, for example a leading diagonal, then we have not yet retraced 61.8% of it. However, I don't think that's probably the case. All of this remains to be seen. All of this has to be confirmed. However, using the Fibonacci retracement level that I've shown you here in cyan, this looks to be the most probable here. That we did have a 5-wave down push here, ABC correction, and then we entered in to and completed the first wave of wave 3, followed by an ABC correction in the form of a zigzag, probably, even though this is quite choppy as well. And so we are looking for this not to exceed this peak, and certainly not to exceed these peaks right here. If it does do that, we're just going to have to examine this, because that means something else in this wave structure is not clear to us, is not correct, and needs to be examined again. In any case, if this was a 5 waves down and we have in fact entered into the 3rd wave here with a first of 3rd, then this should be just about concluded at this point, and we should enter into a very sharp sell-off probably tomorrow morning right away in a 3rd of 3rd. So let's wait and see how this unfolds, but I'm feeling pretty good about this wave count so far. It is preliminary, of course. Needs to be confirmed, but I'm feeling pretty good about it. Let's go ahead and take a look at the Volatility Index. Now we're looking at the daily time frame here, the Volatility Index, and as of the last video I was talking about this candlestick here where the Volatility Index moved higher while the market moved higher as well. Very rare occurrence. It does happen sometimes, but you want to be watching when it does, because usually it signals something is about to happen. Now we did expect further weakness here in the Volatility Index that may bring us back to this support zone. In fact, we got an overshoot of that right here, moving below it before closing back above it, putting in a huge reversal candlestick as well. Then today we had a gap up in the Volatility Index followed by a close down, putting in a red hollow candlestick. Another indication that we are probably about to see a massive surge in volatility. If we combine that with the likelihood that we may be seeing a 3rd of 3rd wave tomorrow, we can expect that volatility to begin to erupt. Let's wait and see what happens, but I'm feeling pretty good that we will at least see further selling in the market tomorrow, followed by a surge in volatility. More to come with tomorrow's video. If you don't mind, please rate the video today or leave comments. I would appreciate it. Have a great night.